Imagine investing $1,000 into AMD back in 2018. As of March 2024, that investment would be worth $10,430, a tenfold increase and an annual return of 60%. It's an impressive figure, isn't it? But what's even more fascinating is the journey that led to this growth. You see, the numbers are just the result of a series of strategic decisions and performances that have shaped the course of this tech giant over the years. In this video, we'll go beyond just the figures. We'll dissect AMD's financial and business performance, shedding light on the key drivers of this extraordinary growth. We'll explore revenues, profit margins, net profits, assets, liquidity, and operational efficiency, among other things. So, what led to this incredible growth? Let's delve into AMD's business performance. In 2023, AMD reported a revenue of $22.7 billion, marking an annual growth rate of 28% since 2018. This growth wasn't linear, with some years showing phenomenal surges. Between 2018 and 2019, the growth was a modest 3%. The following year, however, AMD's revenue shot up by 46%. The upward trend continued in 2021 with an impressive 67% increase. There was another significant jump of 44% in 2022. But then, in 2023, AMD experienced a slight dip with a decrease of 4%. The revenue structure of AMD is diverse and balanced, indicating a robust business model. 29% of the revenue comes from data center, 21% from client, 27% from gaming, and the remaining 23% from embedded. This wide range of sources ensures that the company doesn't rely on a single vertical for its income. Geographically, AMD's revenue stream is also well distributed. 34% comes from the United States, 20% from Japan, 15% from China, and 10% from Singapore. Europe and Taiwan contribute 9% and 8% respectively, with the remaining 4% coming from other parts of the world. What's particularly interesting about AMD's revenue growth is how it has been achieved. The company has managed to tap into the rising demand for high-performance computing, gaming, and data center solutions, all while maintaining a balanced portfolio of products. So, what does this mean for investors? Well, despite the slight dip in 2023, AMD's consistent growth in revenue over the years is a positive sign. The company's ability to diversify its income sources both in terms of products and geography indicates a solid foundation for future growth. This, coupled with the increasing demand for AMD's products in various sectors, paints a promising picture for the future. Despite a slight dip in 2023, AMD's consistent growth in revenue is a positive sign for investors. AMD's gross profit margin in 2023 stood at 50%, slightly higher than the 5-year average of 46%. This increase is a testament to AMD's ability to manage its production costs effectively while maximizing the price it can charge for its products. However, the net profit margin for the same year was 4%, notably lower than the 5-year average of 11%. So what led to this discrepancy? The primary reason for this dip in the net profit margin was a surge in costs in 2022 and 2023. This increase was largely due to the amortization of goodwill that resulted from AMD's acquisition of the semiconductor company, Xilinx. This is a non-cash expense that impacts the net income and consequently, the net profit margin. It's worth noting that such costs are temporary and tend to decrease over time following an acquisition. Now let's turn our attention to the net profit. In 2023, AMD's net profit was $900 million. When compared to the figure from 2018, we see an annual growth rate, or KGR, of 25%. This growth rate reflects AMD's consistent ability to generate profit over the years, despite the temporary increase in costs due to the Xilinx acquisition. Moreover, it's important to understand that the gross profit margin focuses on AMD's core operations, while the net profit margin takes into account all expenses, including those outside of AMD's primary business operations, such as the costs associated with the Xilinx acquisition. Hence, while the net profit margin saw a dip, the gross profit margin provides a more accurate picture of AMD's operational efficiency. Despite the increased costs, AMD's profit margins and net profit growth are indicators of a healthy financial performance. Even with the temporary dip in net profit margin, the company has shown its ability to generate profits and enhance shareholder value, proving its potential for long-term growth and stability. In 2023, AMD's total assets amounted to $67.9 billion, with net assets of $56 billion. This was a slight increase from the previous year where total assets were $67.6 billion, and net assets stood at $55 billion. A company's assets are a measure of its wealth, while net assets represent the value of the company after all its debts are paid. When we look at the equity to total assets ratio, we see it was 82% in 2023, slightly up from 81% in 2022. This ratio gives an indication of a company's financial leverage. A high ratio suggests that a company has been financing its growth with more equity than debt, which is usually a good sign for investors. In AMD's case, it demonstrates the company's strong financial position and its ability to service its debts. Now let's talk about the current ratio and quick ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations. In 2023, AMD's current ratio was 2.51, up from 2.34 in 2022. This means that for every dollar of current liabilities, AMD had $2.51 of current assets. This is a healthy ratio showing that AMD has more than enough resources to cover its short-term debts. The quick ratio, also known as the acid test ratio, is another measure of a company's liquidity and its ability to meet short-term obligations. It's similar to the current ratio, but excludes inventory from current assets. AMD's quick ratio in 2023 was 1.85, up from 1.75 in 2022. This indicates that even without considering inventory, AMD could still comfortably meet its short-term liabilities. These ratios, coupled with the company's solid asset base, paint a picture of a financially stable company. AMD's strong asset base and liquidity ratios show its financial stability, an attractive aspect for investors. AMD's operational efficiency can be seen in its inventory days and receivable days for 2023. Inventory days, which measures the average time inventory is held before being sold, is at 132 days in 2023, compared to 120 days in 2022. This indicates a longer inventory holding period, which could be due to various factors like increased production or decreased sales. In contrast, receivable days, which indicates the average time taken to collect payment after a sale has been made, is at 76 days in 2023, compared to 63 days in 2022. This increase suggests that AMD may be extending more lenient credit terms to its customers, or that it is experiencing delays in collecting payments. Moving on to cash flows, AMD's operating cash flow is $1.7 billion in 2023. This is the cash generated from the core operations of the business, indicating the company's ability to generate sufficient cash to maintain and expand its operations. The free cash flow, which is the cash a company generates after accounting for capital expenditures, stands at $1.2 billion in 2023. This is a positive sign as it shows that AMD is generating enough cash to repay debts, pay dividends, and invest in new opportunities. Now let's delve into the DuPont analysis, a method that breaks down return on equity (ROE) into three components: net profit margin, asset turnover, and asset to equity. In 2023, AMD's ROE is 2%, the net profit margin is 4%, asset turnover is 0.34, and asset to equity is 1.21. This analysis reveals that AMD's ROE is driven primarily by its net profit margin and less by its asset turnover and leverage. Despite some fluctuations, AMD's operational efficiency and ROE indicate a solid financial performance. The company's ability to manage its inventory and receivables, generate cash from operations, and maintain a positive ROE all point towards a robust business model and strong financial health. So, what have we learned from our deep dive into AMD's financials? The company has shown consistent revenue growth with a compound annual growth rate of 28% since 2018. We've seen the distribution of their revenue stream, with a significant portion coming from diverse sectors like data center, client, gaming, and embedded. Their profit margins have remained robust, with a gross profit margin of 50% in 2023, slightly higher than the 5-year average. The net profit has been growing at a rate of 25% annually, despite an increase in costs in recent years due to the acquisition of Xilinx. AMD's assets have steadily increased, and their liquidity ratios suggest a healthy financial position. The operational efficiency of the company is evident from the inventory and receivable days, while the DuPont analysis provides insights into the company's return on equity. Investing in AMD in 2018 would have been a wise decision given its strong financial performance over the years. Keep up with our channel for more insightful investment analyses.